Yeah, all right, good evening, everybody. If you're in class, if you can hear my voice, I'd like to just type 1 in the comment section. Just type 1. I want to be sure you're in class. If you can hear my voice, you can see my face. I'd like to just type 1 in the comment section. All right, who else is in the class? If you can hear me, I'd like to just type 1 in the comment section. All right, who else is there? I can see Ezekiel, Kenneth in class. Who else is in class? To just type 1 in the comment section. Who is in class? Just type 1 in the comment section if you're in class with me. If you're in class with me, just type 1 in the comment section. All right, now, many years ago, this is one of the things that helped me as a person. Many years ago, my youth leader in church taught me something. I heard it many years ago that you don't. He said it, in religious settings. In religious settings, and he said, you don't learn how to pray by praying. You don't learn how to pray by praying. So you learn how to pray by actually, finding out and learning how to pray. You learn how to pray by learning how to pray, not by praying. And that was very instructive. I said that to say this. Even in trading, you don't learn to trade by trading. You learn to trade by learning how to trade. I've seen a lot of people that they just keep trading and keep trading. They're not learning more. They're not learning more than the little they know. So they stick with the little they know, and then they think that's all. They keep making. They're just within a circle. They just, merry-go-round in a circle. They're just within a circle. They're not making progress. They make money, they lose it back. They make money, they lose it back. They make money, they lose it back. And then you wonder what the hell is the problem? It's because you don't learn to trade by trading. And of course, I understand that part of what you do is to actually trade, but you learn to trade by learning how to trade. Most people are like that. They keep saying the same thing, they keep doing the same thing. They've never attended the seminar. They've never paid anybody to train them. They've never, read any complete book. They've never attended the forex school. Sometimes people ask me a lot of things online. You can they ask so many things. They ask me some question. I just ask them, which forex school did you go before you start trading? And I bet you, more than 95% of people you ask, they've never attended any forex school. You think it's that easy? You think you just come, you think you think you can know how to trade by trading? No, you don't know how to trade by trading. You know how to trade by learning how to trade. If that's how it works, it means that nobody else will do anything else in the world. They just be pressing button, press buy and sell, and nobody will do anything. If that's how it works. So you learn to trade by learning how to trade. You become a trader, a profitable trader by learning how to trade. And that's how it works. It requires, at the beginning, it requires time investment. You study, you learn, you ask questions. Okay? It's not by strong head, it's by certain understanding. And the more you spend time with the study, sometimes it can take you 6 months of study without placing a single trade on live accounts. You're trading 6 months. 6 months. It took me 8 months to configure my head from swing trade to day trade. 8 months. 8 months of reconfiguring my head, configuring my mind. I was accustomed to swing trading. To switch to day trading takes like 8 months. There are times I will discover something. I will leave my house, lodge myself in an hotel just because I want to practice something and I did not want distraction. I've done that a couple of times. Okay. And when I learn something, I can spend 4 weeks practicing the same thing. I can backtest. I've backtested 40 years before. 40 years. Picking 10 instruments. I'm backtesting 10 years. Why? Because if what you know has not become, is not in your subconscious, just forget, you will lose it when you're in live markets. If what you know has not been pushed to your long-term memory, if what you know, you cannot find it within 15 seconds in the market, just know that you have not known it well. Tell you. So if I ask you to submit 40 assignments, and I know why. If I have to backtest 1 year, 2 years, I know why. Not because you just give me one example, you must do it again. See how a footballer you just practice and rehearse the same thing every day. The same thing every day. The same thing every day. Okay? You just rehearse it again and again and again, and you are saying, dude, even when you have known it, you backtest it again. There were days that I backtest a certain time of the night every day. Get myself backtest again, so that when I come on because you see, it is when you spend time with the chart that something will begin to pop up at you. There's certain thing I can teach. I've not really got into the things that are very peculiar to myself. There's something I can teach. I've not seen them taught anywhere. They just jump at me. I've been training gold since this month now. We have only lost one signal. It's got a certain thing I understood at a certain time. You can't find it in any book. You can't find it anywhere. It's personal. I understand that we need some technical analysis alongside with it, but just too personal. I traded gold in 3 months. You have only lost twice. The second one was this last Friday. It's an understanding. And then you trade, you back test, you sit down with your computer. And I want to encourage you. Choose only like one or two instruments. Choose like one or two instruments. Just one or two instruments and focus on it. Focus on one or two instruments. If you are picking GBP USD, pick it. If you are picking USD pick it. If you are picking gold, pick it. If you are picking Nasdaq, pick it. If you are picking any USD card, pick it. Just pick one or two instruments and focus on it. Because sometimes some of these instruments behave differently. They behave very differently. You know, some of them have what I call clean movement. I love instrument that has clean movement. I love instrument that has clean movement. There's something they call clean movement. If you trade derivative indices, there are instruments that are not clean. They don't have clean movement. Clean movement. There are about 5 or 6 today. Their movement is clean. Is clean. In other words, you don't have too much unnecessary wicks. Wicks that are just confusing you. Long wick, small bodies, long wick. If you have a defined body, let the candles have defined body. Don't disturb me with unnecessary wicks. So you need to understand that. You need to understand. So pick two instruments. Pick instrument. It will. I'm trying to help you shorten your journey. Pick two instruments, and sometimes too, you need to be exposed to many of them before you come to a point where you select two instruments that are best for you. So I've already given you some instruments. I've already given you there's something they call major currencies. And I've shared them with you. There are about 7. I already shared them with you in this class. Just familiarize yourself with them. Okay, major currencies. GBP USD, USD JPY, USD CAD, GBP USD, and then we have NZD USD, then we have CHF USD. We have like 7 of them. 7 of them. Then we have minor currency. Those one I told you are major currency. Then we have mixed currencies. Like that, like that, like that. So focus on choose one that suits you. I saw somebody using USD JPY giving me to you to do the assignment. Very beautiful. That pay is very nice, very, very, very awesome. And when you choose that one, what is the best time that the market moves? I want to go one of these. I'll come and share that with you because, for example, when I trade USD JPY, I trade it 2 times. I trade it at the middle of the night like this, around 1 a.m. Nigerian time, 1 midnight, 1 a.m. 1 to 3 a.m. Sometime around 12, I set my pending order. Around 12 midnight, I set my pending order. Whether I'm doing something on my way, sometimes I stay away because of USJPY. Then I trade it in the New York session. I don't take USJPY in London session. I don't trade London session. It may have movement too, but it's better traded because at Japan time and New York time, USD JPY. JPY is Japan. When is their bank open? Their bank open at Nigerian time, 1 a.m. So all of this now, you need to understand. You need to understand. And when I'm teaching you this, focus more on the currency pair. After we have concluded on currency and how to trade them, it is easier for you to move to derivative synthetic indices. It is easier. If you start with derivative synthetic indices, I prefer, don't let me say that way, I prefer that you begin your study with currency pairs, and I mean forex pairs, then indices or stocks and the likes. And at least currency pair, then you can now move to synthetic indices later. In synthetic indices, we're not trading real market, we are trading synthesized, synthetic market, a derived market. You understand? It is not a real market, it's a mimic of real market, and we are trading against algorithm. You're not trading against real cash, you're trading against programming, a robot. So the rules are different. The rules are different. You cannot the rules are different. That's just it. I just want to postpone so much talk about synthetic indices to much later. Okay, so that's what I wanted to learn. First of all, I want to learn this night that you don't become a profitable trader by trading. You become one by learning how to trade. No, you don't become a pilot by flying a plane. You become a pilot by learning how to fly a plane. You don't become a singer by singing. You become a singer by learning how to sing. That's just it. You don't become a driver by driving. You become a driver by learning how to drive. Even though all of these things, flying and driving and singing, they are part of what you will do. But then there are rudiments, there are principles that govern all these things. That's very important. So please pay attention. It therefore means that you have a lot. We all have a lot to learn. We all have a lot to learn. I tell you, there are books I've read more than 20 times. 20 times. And sometimes I read them, not because I don't know what is inside. I read them to keep those memory afresh in my mind. And so that when I see them, I just know this is going to go this way, this is going to go that way. Is that okay? So all right, tonight there's something I want to share with you tonight. And let me first of all share my slide with you. All right, can you see my screen now? If you can see my screen, you can see Dawn Zones or the AOI. Just type 2 in the comment section. Type 2 in the comment section. If you can see my screen, you can see the AOI, the AOIs. Type 2 in the comment section if you can see the AOI. I'm waiting. I'm waiting. If you can see the AOI, just type 2 in the comment section. All right. All right, so let's go. Now, there is something, see, technical analysis is all about AOI. The AOI here means, it means the area of interest. The area of interest is very important. The area of interest. The area of interest are your basically your area of interest are your they are your area of interest are your support and resistance. Okay, support and resistance. Support and resistance. That's your area of interest. Then your area of interest we have, for the purpose of this class, we have a trend line. Trend line touches your support and resistance, your trend line touches. What else? Yeah, I think that's all for now. Your support and your trend line touches. Okay, and that's it. And that will now what will lead us to what I called my most reliable reversal candlestick pattern. My 20 most reliable reversal candlestick pattern. And so let me run my slide. Then we get to the chart. Okay, first of all, understand that every time in the market we have buyers and we have sellers. Every single time in the market, we have buyers, we have sellers, we have the bulls, we have the bears. That's every single time. Every single time. I need you to understand that. Understand that every single moment there are two forces at work: the bulls and the bears, the buyers and the sellers. Two forces are always at work. When the bulls are having upper hand, you start seeing green candlesticks. And that shows strong upward price momentum when you start seeing green candles. Then the reverse is the case when the bears are having upper hand. When the bears are in control, you will begin to see red candlesticks, and that shows strong momentum to the downward price movement. And we need to understand that. Okay? So when you have green candle, it does not mean there are no sellers in the market. It means that the buyers are having upper hand. The bulls are taking control. There are more bulls in the market than we have the bears. So before you start looking for the reversal candlesticks, the reversal candlesticks, you should look for area of interest. You should look for area of interest. You should look for area of interest. Reversal candlesticks are only relevant. Reversal candlesticks are only relevant on the area of interest. They are only relevant on the area of interest. Please take note. General rules. General rules. The higher the time frame, the stronger and the more reliable the reversal candlesticks are. Meaning, the reversal candlesticks you see on M15 is stronger than and more reliable than the one you see on M5. And the one you see on 1 hour time frame is stronger than the one you see on M15, and so on, and so on. What I'm telling you is that, and that's why there's so much noise on the lower time frame, so much noise on 1 minute, so much noise on 5 minutes, so much noise even on 15 minutes. So if you see a reversal candle on 1 hour, it's stronger, much stronger than the one you see on the 15-minute time frame, even the one you see on 30-minute time frame. And imagine you see a reversal candlesticks on 4 hours time frame. My goodness. Oh boy. It's stronger and much more reliable than the one you see on a lower time frame. Okay? So from tonight, we're going to begin to talk about some specific, specially selected, relevant reversal candlesticks. They're special. They are intelligently selected. And when you know them, they will fetch you money. They will help you to make profit from the market. Okay? All right, if you can see Doji on your candle on your screen, please type Doji in the comment section. Just type Doji in the comment section. If you can see Doji, you can see the Doji candlesticks. Please type Doji in the comment section. I want to be sure you're hearing me. Just type Doji in the comment section. If you can see Doji there, just type Doji. If you can see my screen, just type Doji. Just type Doji. Type Doji in the comment section. All right. So now, we have Doji candlesticks. These are very important candlesticks. There are 20 of them. I'll be sharing Doji with you today. And Doji has 5, variations. 5 variations. Doji has 5 variations. And you need to master them because each of the variations signifies something a little bit different from the other ones. They are similar, but they worth paying attention to the Doji candlesticks. So we have 5 variations of Doji. 5 variations. You have the common Doji. We have the long-legged Doji. We have the dragonfly Doji. Then we have what we call the four price. We have the gravestone Doji. the gravestone doji, the common doji, okay? I used to call it simple doji, the common doji, the long-legged doji, the dragonfly doji, the four price, the gravestone doji. And these are they look like. They look like this. This is the common doji. The common doji. You know? That's the common doji. It looks like this. Now what it means is that price open. When you hear doji, what it simply means is that the opening price and the closing price are the same, or relatively the same. The opening price and the closing price are the same. Or you can say relatively the same. So what happens is the price opens here and rallies down. That means the seller puts the price down. Then the buyers came in, push the price up again. And by the end of that time frame, the price comes to close at the opening price. What that means is that within that time frame now, the buyers and the sellers agree on the same price. The buyers and the seller have agreed on the same price. So here now, it is a time of indecision in the market. That is the word. It's a moment of indecision in the market. So when you see doji, for example, when the market is when price is buying, and it gets to a particular area of interest, then you see doji. It means that the bulls are losing their momentum and the sellers are about to, step in and push the price down. Now, when you see price is selling, and you get to an area of interest, and then you start seeing doji. It means the sellers, the buyers are losing their momentum, and the buyers are coming in. Is a moment of indecision in the market. That means no one is having an upper hand. It means that at that particular time in the market, the sellers and the buyers, they have agreed on the same price and the equal price. Okay. Then we have this long-legged doji. It literally means, we have it's similar to common doji. It's similar. It's just that it's longer. The legs is longer than the simple doji or the common doji. And so it means the price open at a particular price and it rallies up. And then the bears came in and pushed the market down. And then the bulls are here, they also push the market up again. And at the end of that time, market price came to close at the same opening price. It also means that there is neutrality in the markets, there is indecision in the market. Now we have another one called gravestone doji. The gravestone doji is a bullish reversal candle. It tells you it is a sign that the bulls are stepping into the market, especially when you see that support. Now, when the market is rallying, the price actually opens here and rallies down, goes down. The bears push the price down, and the bulls came in at the end of this and push the price to the upside. They push the price to the upside. And then at the end of that time frame, the price closes at the same opening price. But who did the last job is always what I used to tell them in my class. Who did the last job? The bears put the price down. Then who did the final job? The bulls put the price up, and it's an indication that it might continue to go up. So that's why we call it a bullish reversal candlesticks. Then you have the gravestone doji. A gravestone doji is the opposite of dragonfly doji. A gravestone doji is the opposite of the dragonfly doji. Okay, and the price opens here and rallies up. When it rallies up, the bears came in and pulled the price down. They're the one that did the final job, and then price closes at the same opening price. There's a hope that it might still go down further. That's why we say it's a bearish reversal candlestick. So when you see this at the resistance, When you see this at a resistance on a downward trend, don't forget what I'm saying. You see this at a resistance on a downward trend, it means it's an opportunity to start getting in to sell. Then we have the four price. The four price means four price, price in four places. The opening, the same price. The closing, the same price. The upper week, same price. The lower week, same price, same thing. Opening price, closing price, upper week, lower week, same thing. So that's why we call it four price in one. Four, the opening price, the closing price, the upper week price, the lower week price is still the same thing. It's the same thing. You know? So that's doji for you. But what things that is common to all of them is that the opening price and the closing price are the same or relatively the same, So let's go further. I said doji, it's basically a moment of indecision in the market, the time of indecision in the market. The time of indecision in the market is the time where the bulls and the bears agree on the same price. It's the time when the bulls and the bears agree on the same price. It's not changing. The price when the bulls and the bears agree on the same price. You will see the opening price and the closing price is the same. It's the time of indecision in the market. It's the time of indecision in the market. And so, when you are in an uptrend or downtrend, watch out for these three variations. The pullback for these three variations, the pullback is over and the price is about to go in the direction of the main trend when you see them. And then we have something like this. A dragonfly doji. This is a bear reversal candlestick doji formation. I already shown you that before. Okay, dragonfly doji is a bearish reversal candlestick formation. Price rallied high and then came down to close at the open price. I already showed you before. The Greystone doji is opposite to dragonfly doji. Note, you should be looking for Greystone doji on the downtrend to go short. I've explained that one to you also. And so, dragonfly doji is a bearish reversal candlestick to attack formation. Price rallied high and then came down to close at the open price. Okay, so I like you to write this assignment down. How many variation of doji do we have? Using any chart of your choice, show me 3 places each where each of these doji is formed. 3 places each where each of these doji is formed. That's the assignment. Is it showing on your screen now? The assignment is supposed to show on the screen. So write the assignment down, then we'll go to the live chat. And show ourselves some live examples. How many variations of doji do we have? Using any chart of your choice, show me 3 places each where each of these doji is formed. Okay, so let me share my chart with you now. Can you see my screen now? If you can see my chart on the screen, just type 3 in the comment section. Just type 3 in the comment section. All right, beautiful. So I said don't forget, I started by saying that Dojis are not, first of all, let's find doji. Then we'll now combine them with the area of interest. Okay, doji. You can see this one now. You can see this. You can see this candle here. This is a dragonfly doji. Dragonfly doji here now. And you can see that when it formed, the price started coming down. It was going up before. That means the pullback has ended. It started coming down. When you see the dragonfly doji, it's telling you that look, these bulls that are pushing the price up, their energy is exhausted and they're about to come down. Then look at doji here again. Look at doji. Doji is formed. Doji is formed here again. Wherever you see, where you see this doji formed, it's got that price started coming down. Price started coming down. So you see another doji here. Another doji here. This is a long-legged doji. A long-legged doji. So let's just identify plenty dojis. Plenty doji. This is another doji. This is a common doji. And when it formed, it marked the end of this pullback and the beginning of price going into the in the direction of the main trend. You see doji here too. You see doji here too. This is spinning top. It's a little bit different, but this is doji. You see doji here too. This doji marks the end of this pullback, and the beginning of an uptrend, the beginning of impressive movement. You have this doji too. Did you see this doji? This doji, this doji, this is another doji. Then we move further. You see doji here too. You see doji here too. This is another doji. Then we have this gravestone doji. Then you have this doji here too. Then you have this doji. See this doji. You have this doji here too. Okay, this is a doji. Then you have this doji here also. You have this doji here also. You can see this long-legged doji. You can see something is usually happen almost every time you see a doji in the market. This is another doji. This is look like shooting star, but you can assume it's a doji for now. Okay, this is gravestone doji, and I told you when you see that resistance, it's the beginning of downward movement. Okay, so these are the kind that you look for. See this one. You can see this doji too. You can see this doji. You can see this doji. This is another doji, and this is another doji. This is another doji here. Every time you see them, look at it. At the formation of this doji, the pullback has ended. Price is coming down. Here, at the formation of this doji, this uptrend has come down. The price is coming down. It's coming down. And you can see doji here too. So I just need to just go on your chart and identify as many doji as possible. Did you see this doji now? Did you see this doji? This is long-legged doji. They have another doji here. Then then they have another doji here. I remember something, the story I used to tell in the class every time I'm teaching doji. I remember years ago, some guy traveled from their state and they came to meet me, to learn forex. So they lodged in an hotel for 3 days. So I think on the is it second day or third day? I think on the second day we reached this area of reversal candlesticks. I started teaching. I taught them day 1, day 2, and then at the end of day 2, no, I think it was day 3. It was day 3. They came and we started. I said, okay, today I'm going to be sharing with you reversal candlesticks, and then I started showing them. The first time I was showing them, that was years ago. I think 2019 or so. So I was showing them this doji. Guy, by the time they saw doji and they saw that almost every time doji is appearing, something is happening in the market. You know what this guy did? They stood up from the chair and they said, boss, we are going up. This doji is enough to make money. This doji is enough to make money. You can't believe they did not learn the remaining candlesticks. They did not learn the remaining the reversal candlestick. They left. They traveled back. Why? Because they were seeing, can you imagine? Everywhere they are seeing doji. Everywhere they are seeing doji. Something is happening. See doji. Doji candlesticks. Doji candlesticks. Doji candlesticks. Okay. You see, you see the gravestone doji here. You see another doji here. Yeah, this one look like pin bar, but you can say it's a dragonfly. So they're very similar. But you see, what they communicate is what matters. It's not really the name, is the technicality behind the formation that is very, very important. That's very, very important. So you can see doji here. You can see doji here. You see this one is a dragonfly doji, and then we see you see doji. Did you see the long-legged doji? Did you see the long-legged doji? Where it formed is where the price started to come down. That's exactly what we're saying. Where it formed is where the price started to come down. Then you see here too, where this doji formed now, that it marked the end of this uptrend now, and then the price started dropping seriously. And then you see this one too. You see this one too. You see this dragonfly doji, and the price begin to come down. Those are the things that you pay attention to, especially at the area of interest. Those are the things that you pay attention to. You pay attention to them. You pay attention to them. You see, you pay attention to this reversal candlestick that will begin that we started sharing from today. See this doji. The way this doji is formed now, price started to rally, price started to go down. The bear started to push the price down. I'm telling you, so important. So I'm familiarizing you with doji. I'm showing you doji candlesticks. And I told you we have five variation. This one is like I think we can also call it a long-legged doji. Long-legged doji. And you can see this gravestone. This gravestone, even though it looks like shooting star, but this is gravestone. This is gravestone. You can see when that thing formed, then price begin to rally down when it forms. So these are the things that you pay attention to as a price action trader, as a naked trader, These are the things that you pay attention to. The things that you pay attention to. Did you see? This is where those candles are forming. Where those candles are forming. Where those candles are forming. You see them like this. You see? You see them? You see them? You see them? They are all everywhere. They are all everywhere. And when you see them, you know something is about to happen. Something is about to happen. Something is about to happen when you see them. That's when you now see them at your area. So I think I'm going to stop in the class here now because I don't want this video to be too long. Then tomorrow we'll start combining them with the AOI, the dawn zones. You start combining them. That when you see them at certain point, you don't just take action just because you see doji somewhere. You need to know where exactly it's formed and what am I actually expecting. Does it tally what I'm expecting? Do you see this long-legged doji? The moment it's formed at this place now, see market move. This downward trend stopped and then it moved a little bit to the upside. And then you're seeing, do you see all this one? You have the dragonfly, you have the common doji, then you have like maybe like a common doji again, a common doji again. Then you have doji here. The moment is here now, something is always happening. Almost every time doji is formed, something is always happening. Something is always happening. Did you see doji here? This long-legged doji here. The moment this price pulls up to this side and then long-legged doji is formed, price rally down again. So you are seeing your area of interest. You're seeing an area of interest. There's a resistance here. There's a resistance here. So doji is formed. That means the guys who are pushing the price to the upside now, their energy is exhausted. They are tired. The price begin to move to the downside. Price begin to move to the downside. You see the same thing here. See the same thing here. See the same thing. See the same thing at this spot. Then you see long-legged doji again. Then you see they are all there everywhere. They are all there everywhere. They are all there everywhere. They are all there. Okay, you always see doji almost everywhere. But when you see them at the areas of your interest, then it can fetch you profit. in the market, can fetch you profit in the market. So all I'm trying to show you tonight is to familiarize you with these powerful reversal candlesticks, and then tomorrow we'll be going deeper on how to use them to actually make money in the market, so that this video will not be too long, will not be too. Did you see doji? Doji is everywhere. See this doji. Doji is everywhere. Is everywhere. You can find them on all instruments. All instruments. Do you see doji here? See this doji here? See this doji there? See how the price just this pullback stop and the price move to the upside, and then something is almost always happening every time doji is in the market. Every time you see doji, there's almost always something is happening. Almost always. This pullback ended and the price go to the upside. And just like that, like that, like that, like that, like that, like that, like that. You see this doji too? See this doji too? It always signifies or indicate the end of a particular movement, and then the price move to the upside again. Look at it now. This doji signifies the end of this downward movement. I can see the price move just jump to the upside like that, because a doji candle is formed. So the doji is telling you that the current trend is getting exhausted, and then it might be the beginning of a reversal. That's why you call them reversal candlestick pattern. The reversal candlestick pattern. That's what we are saying. The reversal candlestick pattern. So pay attention to them. Pay attention to them. So the assignment today is that you will give me three examples of simple doji, three examples of common doji, three examples of dragonfly doji, gravestone doji, long-legged doji, and four price. You give me example of all of them. You label them, then you let me know the one you're talking about. Then tomorrow we'll continue on how we can you see why the pullback is ending, then doji is formed, then it's telling you it's the beginning of an impressive movement again. Okay, I believe you have learned something tonight. I want to close this class so that this video will not be too long. Have you learned something tonight? If you have learned something beautiful tonight, I'd like to just type 4 in the comment section. Just type 4 in the comment section if you have learned something beautiful tonight. You have learned something new tonight, just type 4 in the comment section before I end this class. Are you still there? If you have learned something new tonight, type 4 in the comment section. All right. It's all right. So we see you again tomorrow. We'll continue from where we start tomorrow. Just make sure that you check your chart, pick your own instrument, pick your own, and again, just find doji, find where you find the long-legged doji, dragonfly doji, gravestone doji, and then you show me as assignments. You submit assignments anytime from now, anytime from after this class. Thank you once again. See you tomorrow. God bless you all.